in this video I'm going to review a trendline strategy where I was able to cut 225 pips, which was like a swing trade, 234 pips in one single trade, guys. So this was the initial trade. We gave the signal. This is it on the initial trade where price came and hit the trend line and actually entered, but we had other confirmations that we added to this trend line to have this kind of a move, and price actually moved for like many days and was actually giving us this kind of reward. So if you see there, we only reached about 48 pips, right? It's about 48 pips, or let me say 54 pips, to get about 234 pips. All right, so this is basically what I'm going to share with you in this video. I will share with you this secret on how to catch this kind of moves, draw trend line properly, and how to add other factors to get high probability trend line setup. So we want to watch the video till the end. Okay, traders, welcome to my channel. I am full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX 75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. So this is our chart here. This is the initial state of the chart before the week opened. That was last week. We had price in an uptrend and we had price creating up high highs and higher lows. So we are waiting for price to pull back, and what we had to do was to actually connect, right? So we are going to connect the lows using our trend line here. We look at zones where price have actually reacted more than once, and we see a diagonal kind of support that will be connecting. So in drawing trend lines, what you have to do is you make sure that you connect from the wicks. Like in this situation, you connect from these troughs. These are called the troughs. You connect this to this, all right, so that when price comes and hit, or you realize that from the third time when price comes back and hit, you are going to actually be cashing a trade. All right, you pick up your trend line. Right now, this is how you draw your trend line. Your trend lines, you connect from the troughs of this bottom. You connect, and then you connect through the next one, and then you connect, right? Because the first and the second thing zones that you connect, you are going to help you to determine how you are going to be taking your trade from the next entry. But if you start from here, let's say for instance you take like this, it's not going to be nice because you are going to cut across and it will not be nice. So you are looking for zones that are obvious, that have not yet been broken. Okay, so if you equally take like this, you are going to see that you are going to cut across. All right, you are going to cut across, which in one term was actually working, but now it's no longer working. So we want to connect. You look at the obvious zones that have not been broken. Okay, so you see, if you look at this high here, this is number one high, right? What you do, you connect just to get the touch like that. So you drag, you make sure that you just connect at exactly this week too. Then you drag up. So once you drag up, if you look at it critically, you're going to see now that after connecting the first and the second, which was these two here, right, this number third touch was already an entry setup. So look at how I connect. So I make sure that I get the first and the second touch, and you see now that as price comes back and reject here, someone who entered here would have already caught a good entry setup. But this is not even the trade that we entered. I'm still going to come to that, right? So you can see there, that's how simple a trend line is. And once you enter here, one thing that's nice about the trend line is your stop loss just need to be a little bit below here, and you see that you are going to get a good risk to reward ratio. You target this highs here and price is going to move, right? So now looking at our chart here, you see now that we have connected. Now we are waiting for price to come back the fourth time and hit here. And if you look at it, in order to increase your confidence of entry, you see now that what we have to combine with other factors, right? Now if you look at it, you see very strong bullish momentum here, and you see now that price has left behind very good imbalance, and price will come back to come and fill this imbalance. And you see now that this automatically is what a demand zone, which is also an optimized order block. So here what you do now is what you see now that for people trading based on order block, this is the last candle that was formed before that strong off move there. So there are people who are going to actually plot at this candle, because price will come back to fill these imbalances, and when price comes to fill this imbalance, what happens? It will tap to this one and most likely go up. So that is already a double confirmation, right? Now most people will enter based on the 50% of this, let me say, base, talking on the supply or the demand strategy. This is actually, many people will be entering based on the 50%, this is the 50% zone here of this particular candle, right? So now this is already an entry opportunity. So now in this trade, we're actually waiting for price to come back and reject here. So we'll be entering, and then our stop loss will be below this candlestick here, and then our target will be up there, right? So we can have one target, because this at the time, or rather this is the previous high that we had at the time. So this will be the first target. So when price pulls back, we are going to be looking at that. So now we play and then we wait for price. Now price is pulling back to fill the imbalances that we have, and then to get to our trend line zones, right? So we don't want to rush in. All right, this kind of an inducement that just induce people from entry, maybe based on this imbalance here. And now this is how price drops right down to this zone here. So there are two ways you can enter: by placing a buy limit order. There are people who place buy limit order at exactly this candlestick here, and then their stop losses below the zone, so that as soon as price just hit the zone here, it gets executed and move up. Now the essence of placing that limit order is because you don't want to incur a wide stop loss. You might place a limit order here, that as soon as price comes, it executes. Your stop loss is below this candlestick here, and then your target is above there, right? While other people might still have to wait for candlestick to reject before they enter, right? So that is already a rejection there, as you can see. And as well, that is 50% of this a candlestick or this other block, which is an entry for someone. So we have already two double confluences of entry, which make the probability very high probability. So that is why you see we actually get the signal. So let's see how price plays out. So remember, this is a 4 hours time frame, guys. This 4 hours time frame, and even in the 1 hours time frame, we had very good entries. Actually, we did not enter based on the 1 hours time frame. That it was actually based on the 4 hours time frame. And if you look at it, we entered right below here. Let me go back to the chart and then show you the example. Right, this is it here, and it was based on the 1 hours time frame. You actually entered based on the 1 hours. That's where exactly when price hit the zone here, it just turned back, right? So we entered our stop loss below here. Look at price for the whole week. Price was moving up, moving up, moving up, and moving up. So now if you look at it now, going back to our live, what I did now is I already identified now that we have what a chart pattern here. So what I did now is that I actually connected it. If you look for from the charts, the one I actually shared, I realized that this one place here acts maybe like a pattern, which could be like a flag pattern, and that could still be an entry for someone who did not enter at the original entry. So if you connect like this, you are going to see that it's going to give something like maybe a pattern. And with this pattern, if you didn't enter at this point here, you can see wait for price to break out at here, and then you see enter, and you see ride the trend as well. That's why you see from the initial chart, you see we actually did something like this, and then we were expecting that for someone who didn't enter here can see enter at this breakout, and that's why you see that we gave the signal in the VIP. This is it here, okay, and we're expecting that price was going to move. And if price move out here, maybe you don't enter, maybe you can come and then retest, and then you still enter, still ride the move. So that was that simple, guys, and price has actually moved just as it was. So let's just play so that it moves up. As you can see, so that is where market actually closed, and that's about 230 pips or above that, just in one single move. And you see now that as price keeps moving, you can see keep on identifying other trend line zones. These are other zones that we could have also been taking advantage of, connecting the first and the second zone, entering when price comes and hit the third time, maybe here connecting and waiting for price to hit the third times while the swing trade is moving. You can see identify other opportunities based on this trend line, and you see catch them, guys. So that is basically it, guys. I hope you found the video helpful. If you found it helpful and maybe you want to subscribe to the channel by hitting on the subscribe button and notification bell to see more content like this, if this is your first time in coming across this channel. So thank you so much for watching. You can join our free Telegram channel. The link will be in this video's description below, and see you in the next video.